Hello, welcome everyone. We're gonna wait a little bit more, 30 seconds for today's workshop, the first one that we have in the Human DeFi Hack. We have the first workshop run by Blockchain for Humanity about how to define and how to build DeFi for humanity. And particularly for me, it's a big pleasure to count on the two guests that we have today. Both of them, I'm not sure if they have a bigger heart of a bigger brain, and they are some of the people more knowledgeable about blockchain for good that I know. And it's a pleasure for us, a real big pleasure for us to count on their support to help all the teams and everyone to grasp the importance of DeFi for humanity and ideate solutions that can bring that really brighter future to DeFi solutions. So I don't want to extend myself a lot more, so I will give the mic and the stage to Gus Segovia, who is a core contributor of Blockchain for Humanity, and also a very, very special and surprise guest, who is also one of our judges, is Horian Brewster, CEO of Ethic Hub, which for me is one of the examples, more clear examples of DeFi for humanity that is existing now. So I'm closing my mouth already. Please, Gus, take the stage. The audience is yours. Thanks a lot.
Thanks a lot, Alex. First of all, congratulations for this amazing work that you guys are doing. Please confirm you're listening.
Thank you. Yeah, I'm listening to you, but you have your video off. Put your video on, please.
I'm seeing me right now. Can you see me?
Okay.
This is on.
No, I'm not seeing you.
I can see me. But I don't know. I'm waiting for you so I can start.
Yeah, go go ahead. Go ahead.
Okay.
I will disappear from the screen, and I hope and guess you will be soon on a screen.
Well, in any case, it's not important for you guys to see me. What I would appreciate that you guys actually can see is my presentation. Can you confirm you are seeing that at least? What happened?
Gus, I recommend you to go quit and come back again. That normally works.
Okay. Hello.
Okay.
Hear me now?
Yes, here you are. Cool.
And you can see me. So, oh, I need permissions here to share. I don't see that.
Oh yeah, when you have rejoined, you have lost the right, but you will have it in no time. Let me.
Cool. Yes. In any case, yeah, I was saying congratulations, guys, for this amazing work. Thank you for inviting us to be here and to be an important part of this, I guess. I mean,
sure.
this talk for today, I feel that it's like that one of the main push for inspiration about possible use cases that we will see during this hackathon. So that's an honor. It's an honor to be here in the stage today, and yes, especially to share the stage with Yori, that is going to talk later about this. So can you see my
yes.
screen? Awesome.
Yes, you can go full screen if you want.
I'm going full screen, and I'm gonna start here. So
and activate your video, Gus, please, and we can show you.
I don't. Okay. So yes, it was.
Yeah.
on. Now you can see me and you can
Yes,
see my...
perfect.
Okay. Amazing. So, decentralized finance for humanity. How is that possible? We are seeing in the last few years that, well, in the last several years, we have, of course, seen the emergence of new kind of digital assets. And yeah, I don't think that is already 1 year or maybe 2 that we've seen the born of this new concept that we are calling decentralized finance or DeFi, which is, as many of you know, is a series of protocols that currently are living mainly on the Ethereum blockchain, because it's just there where a lot of innovation has been happening, and especially a lot of people have been coding on there. So when we talk about financial systems, this is, of course, nothing new at all. Humanity and civilization, as we know, has been coordinating around money for several thousands of years. But it was in the last few hundred of years in which we've seen the states, the central banks, the commercial banks to take a special power into this. So I wanted to start today with this phrase from Henry Ford, okay, in which he, as someone belonging to the financial system, but then in the 1920s, he's stating that it is okay that people don't know about how the financial system works, because if they do, they will certainly lead a revolution in the next day. So maybe back then things for them were working okay, especially for the privileged class back then. But in the world that we're seeing today, in the world in which we have the information era, let's say, this has to change. And as a matter of fact, this revolution already started. This is not something new. Almost 12 years ago, we had Bitcoin, and after that, we have different proposals of cryptocurrency, of monetary platforms, okay, that are actually offering an alternative. So there is a silent revolution going. It will be a very long revolution that will last probably even centuries, but for sure tens of years. Okay, so we are very lucky, I think, because we are in the start of this revolution, and we're being an active part of the changes that humanity will have in what it relates to money. Okay, but so far, even after these 10 years of cryptocurrencies in the space, this promised revolution, at least in my view, is not happening. It's not there so far. What we are seeing, or at least what the mainstream is seeing regarding the cryptocurrency space, are mainly trading activities and people speculating. Let's say acquiring value in the sense with new technology, with new cool technology, in an integral or from an above point of view. Okay, so at this point, the simple question is, yeah, they're born in this new financial system, but where is the humanity behind that? Okay, so when I made myself these questions, I directly remember this phrase of the Dalai Lama, because he's if someone knows about humanity, are these kind of spiritual leaders. And this quote is very fun, because when they ask him about what he thinks about humanity, he's really impressed, because what he's realizing is that humanity is actually sacrificing their health and their time in order to make money. Okay, and they are putting money in the center of their activities, and this is causing anxiety. This is causing worries about the future, and this is avoiding them to enjoy the present, to enjoy time with their family, to enjoy time with the nature. And as a result, they are not living the present just because they are afraid of the future. So this is kind of a current state of humanity, in which we are still seeing that the humanity is working for money, while we should think otherwise. We need to use money at the service of humanity. We need to recognize money as a tool, okay, not as an end. So for me, it was very important to stop here a little bit and try to invite you to think a little bit of on this. Of course, this is nothing new, but when we're talking DeFi for humanity, we need to put ourselves in a situation in which we make use of the protocols. If they are individual, this should serve the communities, the collective. Okay, but when we say, okay, let's change the scope of the thing. Let's, instead of making the humanity working for money, let's make the money working for humanity. Yeah, that's cool. Let's go. But what the heck is money? What the heck is money? For people that are in this ecosystem, this is probably a question that is made every single day or every single week, because before cryptocurrencies, we didn't think about the money. So this is an opportunity to rethink about the money, to re-question our own conception of money, and try to shape it regarding what are our principles or even our values. So when you ask people what money is, okay, they actually answer you back with what money does. Okay, not with what money is. These are the function of money. We all know this is economics 101. We all know that money acts as a medium of exchange, unit of account, a store of value, with that definitions that you say there. Yes, this is what money does, but actually it's not telling you what money is. Okay, so about what money is, I like to quote Bernard Lietaer, which is in my consideration one of the most important currency designers in our era, and he liked money as just an agreement. Okay, it's an agreement within a community to use something as a medium of exchange. So according to Bernard Lietaer, even the only condition that money needs to have money is to serve as a medium of exchange. The other two conditions are an options. Okay, unit of account is not is not very problematic because it's just a reference number. And then the store of value, if you think, is always regarding to the expectation of a medium of exchange in the future. So if you just consider that it's an agreement within a community to be used as a medium of exchange, we're approximating, at least in my opinion, very well to the concept itself of money. So again, an agreement. This part is very important because we were talking about technologies with a smart contract, and at the end of the day, and what a contract is made for is to actually set up an agreement. So that's the beauty about all of this. I liked it also to quote this guy when they ask him about cryptocurrencies and finance systems and all this thing. He is stating the following: cryptocurrencies, or at least crypto, is about three things: 1/3 finance, 1/3 technology, and 1/3 religion. Of course, people will see finance and technology. Technology, you can analyze blockchain as a data storage, architecture, and so on, or even the finance, what are the economics behind a blockchain, what is their supply policies, and so on. But the religion is what this guy is saying, just the faith in that cryptocurrency is actually, he's considering that this is an agreement, okay? And an agreement is a mental construct, okay? Money is nothing real. Money is just a common hallucination, if you want to call it somehow. So it has value just because people believe in that. And according to this guy, I'm not going into the details. It just was funny to share this tweet, but I'm not favored to this comment. Okay, you actually see that different technologies have different levels of technology, finance, and religion, and I don't think this is a bad thing. Okay, if you guys know a little bit about the history of humanity itself, it has been ruled by religion, by a series of binding and bonding obligations and bonding contracts, okay, regarding an individual and the community. Okay, I won't make any theological discourse here. This is only just an analysis about what the word religion is, because in the word religion, I find very two key words for the crypto ecosystems that we will build in the future. Those two key words are binding, to bind, and bonding. Okay, because when we create this kind of ecosystem, we need to put incentive in the middle of it in order to gather the different agents that we can have in an ecosystem. Here in this image, I'm just simplifying to three kind of agents, like providers, developers, and users. Okay, but the incentive that we need to design should be on delivering binding and bonding contracts within the individuals and their collective. Why bonding? It is bonding because we need to create a common framework of value. We need to then identify, when we go to a crypto project, like it will be Eternity, we identify with the brand, with their identity, and with some core values of principles. So we feel we belong to the community, and this is somehow bonding, but also binding. Okay, binding because people are actually, when they acquire a token, they are gaining in some cases some rights, or even in some other cases they have even obligations with the community. So we see those two words in the relationship between the individuals and the ecosystem or their communities. Okay. And this is, even if this guy we're talking about three things behind crypto, again, technology, finance, and religion. I will abstract the religious part from it, okay? And I will talk about two things. One is the technology, or even the accountability system that we have for our money, okay? In the past, we have, we still have, we have bank notes, pieces of papers, okay? That is the technology that we have new as in money the last tens of years. Okay, now we're seeing digital banks, now we're seeing distributed ledgers and so on, but it's again always technology. But technology without trust, without commitment, without agreement, again, between these people, will worth nothing. Okay, and we see that just by looking, I don't know, the last fork of Bitcoin. Whoever can fork Bitcoin if they want, but if they don't have a community that agrees on that ticket, on that cryptocurrency to serve as money, it will value nothing. So I like to debrief. I like to break down the money system into other two systems: technology and trust. Okay. So as regards the technology factors behind a token is very easy. According to the technology we choose, we will have different characteristics that we will be better or worse according to the case. Okay. Here I'm just listing a set of those. But I will make a special mention to two of these. The first one is valuability. Okay, valuability is just what we've been talking about. I mean, our token needs to be valued. It has to value something out there in the market. And how do you grant valuability? Is basically out of two things: out of scarcity, you need to at least show that your token has some scarcity rules. You won't mint like infinite tokens or whatsoever, depending to your minting policies. And the second one is utility. What is this token used for? If it's just for speculation, probably you are building a shit token. Okay. We want actually tokens that will be useful for something, for accessing to a protocol, for uploading data, for a future promise of key information for, I don't know, business. And after valuability, the second thing that I'm going to stress the most out of this list is composability. Okay, why composability? Because in this momentum in which we are, when we're talking about DeFi protocols, we are actually talking about Lego protocols. Okay, different products, different services, different tokens. Okay, that are interoperable among each other. We will see more this in the detail, but this is a new the characteristic that the new money is being demanded. Before blockchain, we didn't talk about composability of money. Now it is a thing, because the more our protocols can interact and will interact with the rest of the world, more value we're going to have there. Okay. Well, from the other side, when we are talking about the trust factors, is more simple. Okay, when you are designing a token, when you are offering a token to a community, you need to think about these two factors. The first one is a guarantee of value, something that you can offer as a collateral, something that you can actually bind to on a smart contract, just in case that token holders will demand to extract some values as you have offered here in the first time. So there is something backing up the value of that, okay? Something tangible. While for the other side, the commitment of value, this is just a promise, okay? If you remember when we have the ICOs in 2017, 2018, it was a year full of promises, full of promises, okay? And most of them didn't deliver. So maybe back then there were just too much promises and not let's say guarantees of backup of value. So that's probably why we see that big burst of the bubble a couple of years ago, okay? And today, what we are seeing in DeFi protocols is not based on promise anymore, or at least almost not based in promise, okay? Right now, we are seeing actual protocols that are using different means as a guarantee, as a collateral, that are enabling their users actually to mint and generate new forms of value, okay? So yes, here is just to mention some examples about protocols and components that we are starting to see in this new of a kind of decentralized finance, okay? And the first of it is, of course, what are the money primitive, okay? In Ethereum, we have seen that if the Ether and now the Rapid BTC has been like the main primitive that are backing up value of new and emerging DeFi protocols. Of course, in eternity, we will wait to see the thing, but this time with the AET token, maybe it has sense to use that token as a money primitive. Or in other cases, they use also stable coins as money primitive that will go to different DeFi protocols, okay? ICOs and DAICOs are also another important component that I would like to present today. I'm not fan of ICOs anymore, basically because I told you before, just too much promises and no backup, no guarantee of value there. But the DAICO models is actually quite different. In the DAICO models, there is a special case that Aragon.org has been developed the last year about how to fundraise a project with, like in an ICO, but with some collateral as backup, in order that people, investors that just want to cash out with their token because maybe they don't believe in the project anymore or whatsoever, can actually redeem value against the protocol instead of having to go to secondary markets to maybe trick some people or whatsoever, because you know that the price of that token is inflated and you just need to trick someone else, okay? So the ICO model is very important to understand it. You can look for it online. If not, I didn't told this at the beginning of the meeting, but you also find me in the Hackathon Discord channels, especially in the mentors. If you have any question about what I've been talking today, or just want to know more, just go to the mentor channel in the Discord. Okay. MakerDAO, another derivatives protocols, they made a huge innovation already 2 or 3 years ago, because they realized that the crypto space was lacking of assets that are actually stable to what people consider stable is. In our culture, in our global culture, maybe the most consensuated measure of stability is the USD, the US dollar. This is how it is today. Maybe this will change in the future. Let's see. But the cool thing is that MakerDAO is making use of other money primitive, like it could be Ether, that are actually even pretty much volatile. Okay. And with the smart contract and with the relationship with the different agents in the market, they have put together a series of incentives that assure that people can put some Ether in a contract, and this will mint for them. This will generate for the user new currencies, new, and in this case is new and a stable coin. Okay, MakerDAO was the first in doing something like that. Right now we see also different protocols, like it could be synthetics or UMA, that are generating new kind of indexed assets, if we can call it that way, that we just can create out of other kinds of money. So with synthetics, for example, you can create a new SUSD. This is the way they call it. Or even if you want to create another synthetics of the BTC or AET, you can do it with that. Protocols about lending and borrowing money. Again, they are collateralizing different money primitive in order to allow people to borrow a different kind of assets, and they put that in a marketplace in which compound interest is being offered to people, lending the money, while other people borrowing and taking from that, and following different compound yield rates in that market. We are starting to see that. Okay, and as I will explain it also later, people are already using this for good, how to generate compound interest, and instead of keeping it for you, you can donate it to the cause that you like, and this is somehow called passive charity. Prediction markets like Augur and Gnosis are also being delivered. Decentralized exchanges, this is like the big thing in DeFi, mainly this on 2020, because the main problem that had decentralized exchanges so far was actually to have enough liquidity for offering the traders fair prices at the time when they want to swap one token for another. So far, we knew only centralized exchanges in which there were like a set of investors that only permissioned to provide liquidity in exchange for some fees of the exchanges. So protocols like Uniswap or Balancer are democratizing that, in order that from one side assure that whoever that has some liquidity to share, to borrow, they can do it to the market, and they will have some interest in return. Okay. the reason for this is to be that important, in my opinion, is because for the first time we're actually seeing a fair competitive to the big exchanges. They are actually offering even so much lower commission rates, and they are starting to be very competitive. Okay, so far decentralized exchanges were not that competitive with centralized exchange. And last but not least, we are starting to see also protocols for universal basic incomes. If you have read about what universal basic income is, the concept is just very simple. Is someone, some entity, some institutions, let's call it someone for the time being, is helping people with a very basic income in which people can satisfy their main needs, okay, like eating or having a place where to stay. Of course, the kind of UBI system are not reaching that level so far. They are starting very in a very humble way, okay, but they are giving access to people, and they are giving inclusion to people to explore with cryptocurrencies and to interact with this market, because so far the only way to have cryptocurrencies was to earn it, was to buy it, okay, or if you was lucky, you had to work hard for having some cents of Bitcoin. I don't know. These UBI protocols are at least as today, they are just lowering the entry barriers for markets to explore what they call the cryptoverse is. Okay. I'm finishing with this. Yes, I think I'm in good time right now. I'm just willing to share just few examples, okay, about different protocols and movements that are already providing social impact, okay, making use of blockchain protocols. The first that I want to mention is AirDAI. Okay, they are making use of the compound protocols in Ethereum in order that you can allocate the interest generated on your DAI to a different party of your choice. It can be an NGO, but it also can be your children or your wife or your girlfriends. I don't know. And the second one is Giant Hero. This is very similar to AirDAI, but it's not working on Compound. It's working for Aave. That is another lending borrowing protocol. This is a very interesting proposal happening right now in the DeFi ecosystem. It's called Whaler DAO. Okay. And their proposal is, well, we are seeing they start from the point in which they are acknowledging DeFi as the next big revolution. But as we are seeing that today, it seems that it will be just a new revolution of the richers for the richers, while the poor will remain poor. Okay, so what Whaler DAO is doing is just making a lot of lobby activity, if you want to say that, and participate in the governance system of the different DeFi protocols, looking forward for establishing just a better distribution of the yields, of the benefits. Okay, they are exploring different governance systems, like I don't know. Right now, the governance systems in DeFi are pure plutocracy, which means the one that has more money wins it all. These are voting system based on one token, one vote. So what they want to do is just to propose and experiment fairer governance system with the aim to better distribute the yields. Okay. Pollo Pollo is another project very, very close to my heart. These are some guys in Denmark that they are using smart contracts to make food donation of needed people in Venezuela. Okay, how they do that? Well, you as a donor can, when you click on make a donation, you will see like different people asking for donations. When you apply for a product, you will see you will actually be choosing what do you want to donate to that person. If you're talking about a 6-pack of eggs or just a chicken lunch or whatsoever. So what they do is they make the donation, and the data is storing what product you are choosing, what is the donation recipient. Okay, you pay for that, you put that into a contract, and it's not until the beneficiary of the donation go to that product and he actually asks for that product with that token that he received. In that commerce, they will validate the action of this guy actually coming from this platform to receive the chicken. And this is just a way to donate food for people instead of donating money to people that you don't know what they will do with that. Giveth is actually one of the, if not the first project with blockchain for good at its core. And the Beta Giveth is just a donation platform. Okay, it's just a platform where you can see different campaigns, different causes, different projects, people asking for money. But it has a validation system that is called liquid pledging. Okay, and it makes a lot of focus on the validation. Because it's the social validation that we need to work on the most to, let's say, close the gap between the crypto world, the digital world, and the real world. Okay, these are two realms. These are two different realms that are not interconnected among each other. And the only way to interconnect those to validate things that are happening in the real world regarding to what is expected in the digital world is with validation of people, of permissioned people, of reputed people, if you want to call it that way. These both projects works the same. Actually, I'm going to go to Ethic Hub, which Hori, the founder, will be talking about it later. But this is also about validators, people on the field assuring that people will just behave as they are expected. Okay, and when you have validators confirming this, then this can trigger different transactions on the blockchain. Another cool project. This is more turning to the social currencies space. Okay, this is the seeds. This is a community currency, a global community currency developed on Tezos. Okay, and what they are just willing to do is to place incentive. They place minting incentive where whenever people are making actions that are good for humanity and for our planet. So again, a lot of social validation here that interacts with the blockchain to create the incentive. Circle Gardens is another global community currency. This is on the XDAI chain, if I remember well. And they have this particularity in which this currency is not belonging to any global market. You can exchange circles within any global market, and this is actually its mechanism of protection. Its mechanism of granting the community value will be bounded in that system, and will prevent, let's say, plutocrats of the situation to come buy it all, and then they rule over the other guys. So no, that's not how they build money. They build money. This is a UBI system, okay, but it's based on the trust that people have among each other. Actually, to become a member of this network, 3 different people have to trust you, that you won't be anyone just looking to extract value from the network. Good Dollar is also another UBI system. This is a total different proposal. They are using the Bancor building curve in order to stake collaterals from supportive of the projects. This collateral will create a new monetary supply that they are calling Good Dollar, and then there is this Good Dollar, the one that they distribute to the people claiming this. If you go to wallet.gooddollar.org, you can start with your basic income app. The main thing to consider this is that you have to avoid what is called civil attack. A civil attack is when one person can be appropriated of many identity accounts, and they do that for just having more money. Of course, if I can trick the system and tell him that I'm 5 different persons, then that system is not reliable anymore. So when you go to these 2, there are different approaches, let's say, that they are using to tackle that issue. But I invite you to look deeper if you want. And last but not least, I want to end this presentation with this case from Community Inclusion Currencies. This is an initiative from the Grassroots Economics Foundation. They are operating in Kenya. And in the last couple of years, they are using this currency, which again is based on the Bancor bonding curve. Okay, they use. You remember when I was talking about 2-factor of trust for your currency, that you talk about guarantee of value and a commitment. Okay, they put actually these 2 things onto a bonding curve. Okay, how do they do that? First of all, they identify a set of people that is just committed, okay, to exchange goods and services for this new coin that they are generating. There is this binding social contract that they are creating, okay, from one side. And for the other side, they ask them some deposits, okay, for minting new currency. This deposit, in their case, is just the 25% of the currency that you want to mint. So imagine the situation. You are belonging to a community in need, okay? You just organize among a group of 15, 20 people, 30 people, different agents of that economy that each of them provide different kind of products and services, okay? You commit to deliver your own products or services to whoever came from the community with that token, okay? But also you're requested to put some money in there. So imagine the situation when you commit to deliver, I don't know, 100 tokens for this community, okay? That each of these tokens represent $1. That's cool. So that's one something, okay? One, you make a commitment to this community to deliver goods and services at that price for that token. But on the other side, you put some collateral onto a community potluck, let's say, of 25% of those 100 tokens. So you are actually creating one, if you are 10, let's say you will be creating 1,000 community dollars out of the 25% of its value in dollars. So this is a new kind of collateralizing and a stable coin, okay, with community commitments, and also with some collateral behind. Again, you need some trust within the community to do that. As a result, this will be a community with 4 times its liquidity power, okay? So they will be more able to acquire their basic needs products like water, like bread, like whatever, okay? And at the same time, in those cases when they need to go outside this community, let's say, because in this community they are not producing, there is no one producing olive, okay? They can use that collateral, they exchange those tokens against that bonding curve that I've been talking about, okay? And this creates some price dynamics in that token that you're exchanging. And I'm realizing that I'm mixing a little bit and complicated too much things here, but it's okay. I'm ending. And you exchange that value against the bonding curve. So if you exchange 50 tokens, maybe you will have, according to the dynamics set by the bonding curve, you cash out with 50 community tokens and you will have, like, I don't know, $47, $48 according to the price dynamics. And this creates new incentive for new people to cash in, because they will have discounts in this local market. And so I'm sorry for that complication, but I get emotionated a lot with this use case. So I've been 50 minutes for me right now. So I'm gonna close it right here. I'm going to pass to Hori, and if anyone have any questions or any comments, I think it's better if we pass it to the end of this workshop today. So maybe Yori can also collaborate a little bit here. So
okay, thank you, Gus. Was very interesting. I think he did a great job into the introducing DeFi and some protocols. And I will be more philosophical into why this can be so disruptive and how we can use it for good with the sustainable development goals and everything, impact investing. And that is, I think, the main goal of this hackathon, using DeFi finally for good. So I will share my screen. And thanks for the intro also, Alex, at the beginning.
It's the truth, nothing to thank.
Do you see my screen?
Yes, it's loading, but we are seeing it.
Okay. So, I am Jorge Brewster, CEO and co-founder of Ethic Hub. Ethic Hub is a marketplace. Well, I was already told a bit about Ethic Hub, but it will take me just 1 minute to make a short intro. We help unbanked farmers to get funded to obtain loans from people wherever in the world. And afterwards, we also help them to sell their crops in better conditions. And the lending side is blockchain based. We are not fully decentralized, so I wouldn't say we are DeFi, but we aim to become DeFi in the future. But we also have a non-DeFi, non-digital side that is the selling crops of the farmers. So from my point of view, blockchain is so disruptive because it's not only my view, it's this vision that it is our incompetence. Humans were able to escape, to change living to being nomads or living in small communities, civilizations in cities. When they learn out, and afterwards when these companies and scale the way we cooperate and blockchain is the next step into this capacity of coordination between people, between societies, because this takes out of this system, a fully trustless system based on incentives, on game theory, and this allowed us to step forward with the money as the way we evolve our societies is the mirror of our societies, and decentralized money will be much better into facilitating the coordination of and the investment of the new opportunities. But it's not only about money. Internet democratizes information. Blockchain and I mean Bitcoin made possible that money, and smart contracts allow us to go from money and using other kinds of value and using money in an intelligent way, but not only money. I insist in this. Value has a lot of forms, and money, I think, will become less and less important because now we can tokenize another kinds of value and transact easily and freeless that kinds of value, different values. So with these smart contracts, at the end, we can think in a lot of use cases, and these use cases were funded with ICO boom, and now are some of them starting to deliver value solutions that are starting to have traction. And the most clear use case, because it's the easiest, because it has to be with money and not with other kinds of values is fintech, no? And then we have DeFi, and this is also where Etihub is positioned. But the most disruptive ones will be regarding we will be able to change our organization system, because blockchain allows for a better and centralized governance. But this is so disruptive and mind-blowing that it will take maybe generations to be able to bring this reality to the real world. So going further into DeFi, I only want to clarify what is DeFi and what is not, because at the end, there is no definition of what DeFi is and what is the characteristics. There are some discussions, and this is the point I want to bring to the table, that please don't be so intolerant or so purist, no? That thinking that there is only one definition of DeFi. There is a lot of characteristics that could not be into DeFi protocols, especially immutability. Yeah, sure, for sure, we all want a blockchain to be immutable, but we saw in Ethereum that we had to make a fork, so it is not very immutable after all, even Ethereum. So we had also forks in Bitcoin, but the closest thing to immutability is Bitcoin. So immutability, for example, you cannot really link it to DeFi concept. Programmability, yes, I think the core thing of DeFi is that it is using smart contracts. Interoperability, sure, that would be, we are trying to build the next financial system. So this next future financial system, better financial system, one of the key questions is that, sorry? Do you hear me well?
Yeah, we can hear you, Yori. Sorry, I think this was just a noise from my side. A question, Yori, are you presenting some slides? Because I'm not able to see anything.
Oh, I can't believe it. I was sharing, yeah, all the time. So I will do the same you did, going out and come back. Then
sorry about causing that interruption, but I was just curious. I don't know if Alex, you have some comments, or people in the audience have some comments to do.
Do you hear me well now?
We hear you, Yori, yes.
Thank you. So I cannot share. Can you give me permission again, please? Because I went out. I think I ran out of permission to share. Alex, Eric?
Yeah, one sec. Sorry, I've just seen your double, and I've seen that it has a moderator sign, but it was your ghost.
Now you see my presentation?
Yeah.
So I was here in what is the characteristics of DeFi and why we shouldn't be so purist into thinking that immutability, for example, has to be part of the concept of DeFi, or permissionless. Some other characteristics normally used are permissionless. Permissionless at the end, from my point of view, regulators will come into DeFi and forced to use Know Your Customer and anti-money laundering policies. So it's very probable that it will stop being permissionless in some ways, at least in some protocols. But as you all know, this is a bit old, Diapo, but only 1 year ago, this was DeFi. It was 5 protocols, very few users there. This is a couple months later. This is really 1 year ago. 3 months afterwards, it was starting to grow exponentially. And nowadays, you all know that this is, you cannot look at it in this kind of graph because it will be fully collapsed of protocols and users. It's super short and is the results of ICO bubble, because these protocols, all of them, or 90%, were born in the ICO bubble. And also, I want to bring to the table that the decentralized finance started with internet, with being able to connect lenders and borrowers directly without banks. From me, this was the first stage of decentralization in the finance space. So I would say internet-based crowdlending platforms, for example, are the first example of decentralized finance in some way, no? And then we have most of the DeFi protocols already here. There are DeFi, but still there is a company behind that it has the control of the protocol in some way. And I think that's necessary in early stages. It's very difficult to start fully decentralized. And I wouldn't recommend that, because at the end, shit happens, and normally there could be any bugs and this immutability and not being able to undo bugs in early stages. When anything is being tested, everything is being tested, I think it's a bad idea, trying to be fully decentralized, immutable from the very beginning. It has to be like the vision, but not the way of starting. And most importantly, and this is what differentiates this DeFi hackathon from the others, is that we want to speak about human-centered DeFi, about the problems in the real world, and maybe the clearest problem from traditional financial system is that almost 1/4 of world population is excluded from actual financial system. So this ancient, obsolete financial system that we have today have keep out of the system 1.7 billion people. This is almost 1/4 of the world population. So, and blockchain has the capacity of, or the promise to bring down the barriers of entry. So we can include these people into the global economy, into the next financial system, this DeFi, blockchain-based financial system. But nowadays, all the DeFi protocols are not working into these 1.7 billion people, are working into the crypto investors, whales investors, with millions in crypto, helping them to leverage and taking even more profits from the early newcomers into the space. No? So I think DeFi tools are incredible, but we have to use them not only for including these people into the financial system, but to trying to leverage finance and giving tools to fight against all these problems we have in the world. This is the Sustainable Development Goals. There are 17. Of course, it's not perfect. You could say there are some other problems in the world for sure, but at the end, it's a way of making a target into improving the world. And if you are aligned to helping solve any of these problems, you will find your path easier than if you only try to take advantage of blockchain to become rich fast. Because at the end, many people will help you, and more money, even more money, is at your will come to help you. We have to have clear that the next wave of innovation is not even blockchain. Blockchain is part of the last wave of innovation, that is the digital world, computers, internet, blockchain, digitalization, social networks, etc. All this was the 5th wave of innovation. Before that was electrification, steam power, etc. No? This is from the 17th, 18th century, what has dramatically changed the world in a super short space of time compared to the 2 million years before that the human was into the world. In 300 years, the world has completely changed, and this change is being more and more exponential. And the new wave of innovation, everybody agrees that is sustainability, because we have forced the ecosystem to its limits into these new previous waves of innovation. And now, if we don't focus into sustainability, we will just stop living into this world. We will extinct. So this is why impact investing is so material, because when United Nations said we have to fight these 17 goals, we have to focus on these 17 goals and fight all together into succeeding solving these problems. They also said there is no money enough with the governments. We need private money, rich people, foundations, to put money into the equation in order to change the world as fast as we need. And impact investing is the result of governments, foundations, and private capital putting the money together in order to create impact and produce returns to private investors. Between capitalism, traditional, heartless capitalism that will be here, and philanthropic foundations or NGOs, etc., there is some gray areas, no? And impact investing is exactly in the middle, because this is just corporate social responsibility is here, and it's only trying to, okay, I make some travels into the world, so I save some money and invest it into positive things to clean up my brand. And venture philanthropy at the end is basically philanthropy. Impact investing is trying to produce traditional returns like traditional investment, but with a clear goal of changing something for good. It's not like trying to produce a good return with part of my money, but with my mission. And in impact investing, it's very important how you measure impact. What is the profitability, for sure, because this has to be same profitable that the traditional investments. And as I said before, it has to be intentional. You have to, from the beginning, trying to change some sustainable development goal. And this has to be with three different kinds of capital. Until now, until in the traditional capitalism, we only saw capital or an asset as the money in itself. No, okay, we have more assets and less liabilities, so we have equity, and this equity is only based on financial accounting. But we have to account that if we made that profits taking out a jungle, and this jungle is not anymore there, so we cannot make more profits from that jungle, at the end, your assets are lower. And this, we didn't ever took that into the equation of our balance sheet. And if we took that into the equation, most probable, many people says that in the last 20 years, we were not growing at all. The traditional economical system, capitalism fully for profit, and with no vision into the sustainability, was not profitable anymore, because it was only growing by taking out from the ground minerals or wood from the jungles, or clean water from the rivers, or fish from the sea that is being less and less every day, more scarce every day. So this is the huge opportunity. I want you not to join this movement because you want to help, but also because you see here that this is the future of the world and the opportunity for you to change the world and make profits. This is an economical opportunity, because this is a macro trend. And this is growing exponentially. When I started learning about impact investing, this was less than 100 million in investments into this world, and now it's more than 500 million. Almost, no, 700 million in 2019, and they are speaking about this year crossing the trillion in investments and social, economical investments are aligned with sustainable development goals. And we are just here. It's the same with blockchain. We are in the early stages of this innovation wave. So it's just a matter of time that this grows much steeper, much faster. And so everything that is not into here will cease to be profitable. in this impact space, the greatest news for you all is that there are a lot of different assets that have not been tokenized. There are many ways of investing into the impact space, and none of them are using blockchain to tokenize or to leverage these kinds of investments. We are one of the very few that are doing this. So I really encourage you to take a look into some of these assets that already exist into the impact space and think how to use blockchain to improve the technology behind these assets. Because these assets, as I said before, is not only a social or environmental thing, it's an economical opportunity. And for example, ESG, this means environmental, sustainable, and governance companies that are taking are into these indexes. These companies that are in the stock markets having a clear policy of measuring and reducing impact into environmental, social, and governance issues are always improving the companies, overperforming the companies that are not taking into account these kinds of issues. So it's not only good for the world, but it's more profitable. So the key question here is the blended finance. Blended finance means you can have funds from governments, from development agencies, from social foundations, from charities. All this is called concessional finance. It's people trying to change the world, but they don't want only to give money away. It's okay, I am able to accept first losses if, in order to make this more attractive for traditional investors. So we both put money into a fund, and if there are losses, I take the losses. I am the government, or I give technical assistance, so this fund can provide not only money, but a better use of that money. So investors, traditional investors, say, okay, this fund will be more profitable or very interesting to be invested in. And this is impact investing. This is how impact investing is being implemented. And again, none of these agreements have been done under blockchain smart contracts. And I think this is the huge and greatest opportunity of all. So as a resume, and I close with this, my point of view is that since governments are already committed to these sustainable development goals and are providing positive and negative incentives in order to achieve these goals, so they are helping impact investing to put more money into the equation, because they help impact investing to be more profitable. And in the other side, we have people that is more conscious and are willing to invest into things that provide not only an economic return, but a social or environmental return. And not only is about investing, but also consuming. When they, traditional food is growing 3% yearly. Sustainable food is growing 12%, 20% yearly. So there are year after year more people buying more sustainable products. And blockchain help in bringing more traceability for the money and for the product. And if we use DeFi for good, DeFi can become a huge driver for this change. And if we mix all these ingredients together, that's why I always say, anything that is not sustainable won't be profitable anymore. So with this, I finish my presentation. I hope I inspired someone into here, into work, into this impact investing space, DeFi-based protocols, future protocols. I think that there is where there is the biggest opportunity.
Thank you very much, Jory. I'm taking the stage on behalf of Alex. Just let's see if there is any questions between the audience. You can raise your hand, jump with us, or just put the question on the chat. By the way, it seems like there is huge opportunities over there and a lot of things to do, right?
Yeah, I think this hackathon is the best hackathon of all, because is the first that is taking this into consideration, and that the great opportunity that is there, that we are not using DeFi for anything else than leveraging traders, and the big fight, the huge opportunity is how we use this to bring money to the real world, to bring impact to the real world.
Exactly. Well, that's where we picked this name of human DeFi.
Yeah.
So awesome. Well, let's see if there is questions. Anybody from the audience? This is the right moment. There is one from Eric, our friend Eric. How can you use token system to steer crypto users towards altruistic behavior? Most people act in their own interests.
I think the key question there is, as I mentioned with this blended funding, that okay, people is normally being self-economical behavior, but none of them, and especially now we have the governments with commitments into the Sustainable Development Goals. So at the end, you can take these people that just want to make profit. This is what we are trying to do, and also in ETHHub, we are trying to provide great profits from some kind of investors, leveraging and taking advantage of other players that are happy to give money away, or to provide warranties, or to provide collateral to these other people that is more looking for profits. So I think that's the key question of impact investing, of using money for good, is trying to mix up these two things that already exist into one idea and one protocol, and a smart contract-based relations between these two players to deliver impact into the world and create this outcome of impact.
I think also it's more about an engagement from the user with their community. When you provide a platform or a system in which people actually feel that they belong to a cause and they can do things for the better, and you mix because it's okay to be altruistically selfish in the terms that you want to help people, but you also want to be good yourself. No, so I think that the big challenge is in placing system where the purpose of giving, of apporting to a system is aligned with the financial incentive that they can put for you. One example that I mentioned in my slides was the good dollar one. So that is particularly interest because they are establishing somehow some kind of speculative for good currency, okay, in which supporters can stake some DAI, some C DAIs, which is the compound-based DAI, and they mint more good dollars, okay, out of that system. So part of those good dollars are coming back to you, and part are going to the distribution UBI system. This
It's breaking up a little bit. Gus, are you still there with us?
No, it seems
No.
if
proper question: how to align selfish incentives with altruistic behavior.
There is another question from Eric about the governments and regulation and trustless. No, I mean, if we start asking for papers, some of these unbanked don't have even papers. So, that's a problem. That will again produce barriers of entry, and for sure, I think. I would take an approach of different layers, no? Governments, protocols working with governments, and protocols leveraging these other protocols money into the unbanked or any other people that needs this money. It's impossible to make a protocol that directly connects from the government to the people, because if that was possible, the government will do that by itself. It always try to do it by itself. But you can ask for grants, for example, or collateral. In Mexico, we are speaking with the government in order to give collateral for our farmers. If they don't pay, at the end, government pay. And that way we can convince easier investors in Europe or wherever to lend their money to these farmers. I think that's possible. It's not easy for sure, but there are a lot of opportunity like this in the world, because at the end, there is a lot of money willing to make this change. A lot of funds, a lot of governments, a lot of foundations.
Yeah, from my perspective, when there are depending, you need to identify people, not only depending on the compliance that they will demand to you, but also depending on the design of the system itself. Okay. For example, when you create communitarian credits, okay, going back to the grassroots economics example, you actually need to identify the people. You need to establish some kind of permissioning about who's receiving a credit and who's not, because you need people to trust on the recipient of the credit. And when you permission, you need to identify people. Okay, but when we are talking about identification, especially in Kenya, that is the fresh example, they solve that just by identifying one single person with their telephone number. Okay, as easy as that. So they link one telephone number to the person to their blockchain address or their wallet address and stuff like that. And there are different ways of identifying people. A good dollar is making face recognition with some US company. Then regarding, if the question was more regarding compliance and regulations, that is a place where I don't have a strong opinion. Okay. Because basically, if you make your system decentralized enough, there's no regulation that can arrive and block you or censor you or is willing to stop you. No, so I'm more concerned about the identity part for the system to work than for the system to be regulated. I have this personal belief that crypto systems should be regulated by themselves, not by external government institutes that has no understanding about how things work here. But that's a different story.
I think when it becomes big enough, everything becomes regulated at the end, and will be very difficult to at least.
But yeah, everything should be regulated, but regulated by itself. We should more look for a self-regulation, for a fair competition about the same system that are not willing to regulate themselves or just to take up advantage of other things. But I mean, regulation is always one step behind innovation.
No, I fully agree. What I mean is, at the beginning, protocols are very early stage, and then we have to be self-regulated because we are doing something that is not regulated. So we have to be very cautious and all together think how we do this the best way possible in order to not make a great pain for a lot of people. But the day this evolves, and we are having billions into the protocols, and this is connecting to the actual people in the world, because as far as it is only crypto investors over there in that world of crypto investors, it's okay. But the day we want to finance a new infrastructure and governments say, okay, but this has to pay taxes or whatever, no? So there is the where I see that it will come the regulation for sure, and it always happen, no? At the end with the car, at the beginning they were using cars in the streets and there were some trouble, so a regulator came and was a total mess because they didn't have how to regulate that. And it takes time to regulate it, but I think it's not possible not to have regulation at the end. Another thing is that in maybe one generation we have decentralized governments. So regulation is self-governed because it's real decentralized governance, the governments at the end. And for sure, this self-regulating with incentives will be that's the aim of the token design. But at the end, we have some externalities in our protocols. So if people are producing profits and not paying taxes, that's not fair for the people who are producing profits in other sectors and are paying taxes in order to cover for the social security or educational system. So everybody has to contribute to sustain these services. And this is not into the protocol's native tokenomics, no?
I don't know. I don't think that way, because basically what we are doing is building up new systems, and these new systems are actually some of them are actually parallel or very independent from the current global economic governmental system, what we call the system. So with Bitcoin, with Eternity, with these new protocols, we're actually, if you want, we are building the future of systems, and this system can actually be a competition from traditional things. So you talk about, yes, people are paying taxes, but there are still some taxes, network taxes that you have to pay in Eternity, like a transaction fee or some fee for the protocols, because the protocols need to be maintained and so on. If we left that to evolve, I hope that in the next 10 years we will be more able to close the gap between the digital work and the physical work. We will start to see more commons infrastructure, more hospitals, more roads, okay, in which people can participate or not for paying taxes for that. Okay, it's more according to what they use and what they want to contribute on, rather than just being forced and coerced by a government that, even if you are not participating in that local economy, even if you don't have the benefits of educations or hospitals or wherever, they continue to force you to pay taxes for things that you are not even producing in that country. So yeah, from that side, I think I'm a very anarchist myself. Okay, not sure if you haven't realized that, but I would like to see that kind of innovation flourishing. Okay, and coming back to what I was saying in my presentation, we're talking about money systems, and money is just an agreement among people. Why do we need to agree to make a government agree with an agreement that they're just making here with my neighbors? They don't have idea about our context. They don't have idea about our culture. They don't have idea about our needs. And I want to put this community currency with these parameters that I want to be interoperable with the national economy. And then I go to, and then I realize that the Spanish government is telling me, hey, wait a second, you are actually making a competition to our bank system. You need a license to that. And they won't give you an access to a banking system, especially if you go there with bounding curve and smart contracts that they don't understand. So I don't know. I think it has to be more related to people decisions, to what people want to decide, if they want to submit their data to KYC system, if they want to go to permissionless system. Let's see what happened with regulations when permissionless systems are actually well decentralized. They won't be able to regulate a single thing. They can make recommendations, but they won't be able to forbid protocols or something like that.
In any case, I encourage everybody here. I mean, innovation even governments, regulators don't want innovation to stop. So as far as you are starting, you can do basically whatever you imagine, you try it. Don't have fear from regulator. Another thing is, if you have success, most probable regulator will come and try to regulate you. As we have seen with the first wave of fintech, and we are starting to see with second wave of blockchain fintech.
Yeah, no, totally support that. Yes, and don't start by an ICO if you want to avoid problem with regulators.
Yeah, for example, that's an example. The early years of our ICOs, there was no regulation at all. And after the bubble was all too big, then regulators had to put their feet in and try to stop that burst, but too late. They entered when it was already burst by itself.
Yeah.
But they did it, and nowadays, very hard to do a regulated ICO.
Not sure, Alex, Eric, if there are more questions or comments from the public.
I think there is not. It's Omar here on behalf of Alex. Hello. I like it very much, the last message of not holding on any thought of any solution that could be made. After all, the whole purpose of this process, of this hackathon, is looking and creating great ideas that could help people and that could leverage and empower. So I like it very much, that idea from you guys.
Yeah, and going further into that, sorry, Eric or Omar. Omar, a good point. If you are doing something for good, clearly for good, as we are doing in Anything Hub with the farmers, you find the support from regulators. Regulators are trying to help us, even to create laws to help us, because they want to help people trying to do things for good. If you are trying just to make a protocol to leverage profit at infinitum, you will have no support from regulators. Maybe they will even try to stop you because they see some potential trouble there. No?
Well, it depends if they feel threatened or not. In your case, in that case, I mean, you've been lucky because I know how you have received support from those parties. But in other cases, especially when you want to create new currencies, you want just to empower people, you can defend a huge case about what are the benefits as well as the risks for people doing that. And depending on the culture, for example, in Brazil, they've been innovating about community currencies for several years, for more than 30 years. So they have their regulations very, very well established for that. But here in Spain, you can't. And if it's for good, they will stop you because they are realizing that you are creating direct competition for the bank.
No, but for me, the point is, if you are doing this social currency really for helping poor people or base of the pyramid people, you will have less trouble than if you just want to launch a new cryptocurrency that will grow faster and expensive every day, you know?
Yeah. No, that's totally right.
Cool. Well, guys, thank you very much for being here with us, for giving all this great information and push the innovation on this side. So thank you again. I guess there is no more questions. Anyway, we have different way to get in touch. So I invite you all to be around on Friday, that we will have our first introduction to Sophia and to Eternity language and platform. And thank you again, Gus, Jory, to be here with us, and to all the attendees. I hope that you enjoy it as much as we all did.
Thank you for inviting, and I hope I am also available for if anybody has any question or whatever in the Discord.
Cool.
Thank you. Bye.
Thank you, guys.
Thank you, guys. Have a good one. Bye-bye.
Bye-bye.